Hey, what's up, folks? Welcome back to the channel. Today, I want to focus on a positive topic, not related to the recent performance of the market. We've seen some significant drops lately, and that's really an important reminder that investing is a long-term game, not short-term, and we have to try to ignore the short-term noise and short-term headlines. So with that being said, we're going to discuss a very exciting topic today, the stock split. I'm sure many of you hear about this in the news and have heard about this concept before. So let's discuss today what exactly a stock split is. Well, a stock split, according to Wikipedia, is an event that actually literally does what it says, splits the stock in terms of shares of stock, splits it usually either 2-for-1 or more. So according to this, stock split or stock divide increases the number of shares in a company. It causes a decrease of market price of individual shares, not causing a change of total market capitalization of the company. And what is market capitalization briefly? It's basically the total outstanding value of shares. So, and you can find these metrics on Yahoo Finance typically very easily. But as far as a stock split, the important takeaway is that the price that the stock trades at doesn't change. It's just the number of shares that change. So a very strong case in point we're going to take is a fan favorite, Apple. We're going to look at how much money you would have today if you had bought Apple in 1987, close to the time it went public and after it had its first stock split. So if we take a look at the share price of Apple, we see today it closed at $171 per share. But many of us know that Apple most recently split 4-for-1 last year, last August. And it's been a stock that's before the split had been known to trade for several $100s a share. But after the 4-for-1 split, this is where it is. And it's actually done very well this year. And you can see the upward trajectory this year. But if we zoom out to the maximum, we can see the history of the stock going all the way back to 1984, actually. And adjusted for the splits, which I believe it's had 5 splits over its history, the Yahoo Finance here shows 11 cents per share based on the adjusted after split price. So now I'm going to show you if you had held on to Apple, say you had it since 1987, or even after that, you're going to see how profoundly you would have increased your wealth if you held on to that and went through multiple splits holding the shares of the stock. So you can see this almost J-shaped curve here, especially towards the end here after the 08 and 09 crash. You can see that the stock acceleration really moved upward at a rapid pace all the way to where it is today. And there's actually a site called stocksplithistory.com where you can look up any company's stock and their split history. So for Apple, Apple actually gives a history of the whole total of splits from 1987 all the way to 2020. And you see there was 5 of them, so I was right. And it also shows during the last 10-year period, growth of $10,000 with dividends reinvested. So this goes back to December 20th, 2011. And you can see if you had put 10,000 in at that time, you would have 142,056 cents today, which is phenomenal. But my example I'm going to go over, going back to 1987, is even more profound. It's so profound, I actually had to check my math a couple of times because I couldn't believe it was right. So you see some interesting metrics here. Average annual total return based on this example, 30% per year, clearly outpacing the S&P 500 every year. Start price, end price. And again, these prices are adjusted for all the splits. And then what also plays in here, which I didn't include in my example, it would actually make mine even more profound, which you'll see, is dividend reinvestment, which I did mention when I read this off to you here. It's with dividends reinvested. So that adds to, again, if you check out my video on compound interest, that adds to the compounding effect. When you have a stock that pays dividends and you reinvest those dividends, the compounding effect is even greater. Let's close this ad out here at the bottom. There we go. Okay. Yeah, so there's that. What else do I want to show you here? Yeah, that's basically it. Really good site for information on that. So now let's go to the quick spreadsheet I put together here. So spoiler alert, you can see the end result there at the bottom, but let's go through it. So in this example, it's fairly simplistic. This is just taking $10,000 in 1987, which everybody had back then, right? I'm just kidding. But if you take this in June of 1987 and you invested right before the first 2-for-1 split, June 16th, 1987, the dates being the most important part, right? Not. So the 2-for-1 split with the $10,000, back then with the post-split price adjusted stock price, it was 48 cents. I'm not sure what it actually was back then, but that's what my sources show as the post-split adjusted price. So easy math, 2-for-1 split means you're taking your current shares and you're basically doubling them. So every 1 share becomes 2 shares. It's literally a split. So in this example, 20,833 shares go to 41,667 shares. And if there's anything off on my math, I'm sure someone will let me know in the comment section, but I did check over this a couple of times because I, first of all, couldn't believe the end result. I knew it was profound, but I didn't realize it was this profound. And again, this reinforces a long-term focus, right? You want to buy and hold long-term because these are the kind of results you can see. And stock splitting is really, I think, an underappreciated art, or not an art, but like the compound interest effect. Stock splitting just continues to enhance that even more. So fast forwarding to the year 2000, June 21st, 2000, there was another 2-for-1 split in Apple. So you take the shares that you had, and this is assuming no dividend reinvesting. I didn't really do that in this example. I am interested to see what that would be. So I'm probably going to go back and do that and maybe do another video on that next. But anyway, another 2-for-1 split, just on the simplistic example with no dividends reinvested. You take the shares that were here, move them here, double that. Now you're at 83,000 and change. And the stock price at this time, again, adjusted for all the splits, was $1.09. And then fast forward almost 5 years to 2005, another 2-for-1 split. So again, a doubling of the share price, not share price, but the number of shares. And then that same number adjusted for splits was $1.42 per share. So that's what this column shows here. And the most important number is obviously at the bottom, which we're building up to, but you can already see. And then in 2014, this was really the most profound split. It was a 7-for-1 split, June of 2014. And full disclosure, I actually was in Apple and took advantage of this split, or benefited from it because I was in the stock at the time. Unfortunately, I sold out a few years later, and that was one of the dumber things I did. I still knock myself for selling out of it because obviously we're getting to the fun years here at the bottom. But you see the difference here between the last split and this split, based on, yeah, the shares you have after, and then the price, according to Yahoo Finance, adjusted for the split, 25.63. And again, these prices, these were not the real stock price at the time. This is just taking what it was pre-split and adjusting for the split. Because I remember back then, Apple was like, I want to say $500 or $600 a share at the time. And then it went down to like 70, but you had 7 times the shares. Hence the concept, right? And then the most recent one was last year, August 28th, a 4-for-1 split. So you're taking the shares you got here, which you basically 7x'd your number of shares in the last example. And now And this one, you basically 4x'd your total number of shares. And then you see the result, almost $800 million from an original investment of 10,000. And this is in just over 30 years, right? 33 years, not bad. And here, since I'm having fun, we'll do some live math here per year. Not bad, 24 million per year. How about per month? What is that? 2 million per month. I would take that. And I think we all would. So anyway, with that, wanted to go over a positive example everybody could get excited about. Please remember to like, comment, and subscribe. And I'm looking forward to continue bringing you more awesome content like this. I'm looking forward to, as we get in closer to the Christmas and the holidays here, I'm looking forward to hopefully doing a more aggressive video schedule. So hopefully I can bring you more than one per week. But for now, that's it for today. And that's the key takeaway. So hope you enjoyed that. Thanks so much and have a great weekend.